Hi dear Forex traders, welcome to this special video from Admiral Markets. We're going to take a look today at the dollar weakness that happened last week and have some trade ideas on the pound odd and euro pound, and also still valid the bonus indicator for the entire October when registering for our live trading session on Wednesday or Thursday. As always though, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and I do thank you for your attention on that. Before we dive into those trade ideas, just want to mention one thing about our trading webinars. In fact, special recap on Monday, Tuesday, live intraday trading. Wednesday, no trading session this week, but Thursday, we're back with bounces, and also later that day, an educational topic using the best filters in Forex. All right, these are the typical spreads, by the way, you see at Admiral Markets, and make sure to follow Admiral Markets in social media. So let's take a look at the charts, and we're looking at the euro dollar. In fact, and we saw a lot of dollar weakness come into the market, not only against the euro, but against pound and Aussie and against the yen as well, across the board, in fact, Swiss and CAD. And we're looking at a breakout here to the upside. In fact, we are very close to breaking the big yearly high of 137.11. That is the highest point of this year, 2013. Now, if we push above there, there will be some volatility increase, but eventually we should see continuation up to 138.50 and even maybe 140s and higher, 142 for example. So there is a significance in breaking 137.11, but we haven't done that as yet. Personally, I'm looking for a correction here to the downside to bounce off, for example, 136 to see that continuation to the upside. I think that's very likely if you look at the strength and the impulse here we have on the euro dollar. One more continuation is likely, but we're pretty high at the top. So what I'm expecting is a three-wave correction and then a bounce to the upside. One thing we can do is, for example, place a Fibonacci retracement key on this upside and look anywhere between a 382 and a 618 could be the bouncing spot for upside, maybe even deeper or shallower, but most likely any of those three fibs would see that continuation to the upside. And regarding the euro, I have one more idea on the euro pound, in fact, and we did make a very impulsive move up here, 5 waves. So I'm looking for an ABC correction down to the 618 fib, where I'm looking to enter for an upside continuation all the way even up to 88 or 87, in fact. So maybe even to 98 eventually, but that's a very, very long-term goal, of course. So looking for a correction, but not trying to trade the correction to the downside, but looking for the bounce at a 618 fib for the upside, which could see a huge momentum come into the market, because if you look at the bigger picture, there could be a breakout on the weekly chart to the upside. And that weekly breakout looks like this. This is the trend line, the black one, indicating the weekly tops. Once price moves above that, we can see a huge momentum maybe come into the market. Of course, there's still that resistance to break, so we can see a move up to the resistance, then maybe a pause, and who knows, then maybe break for that bigger move. All right, and the last one, pound odd, you can see a reversal going on as we speak. We can see a more or less double top or weakness, in fact, and we're reversing ever since. And we've broken the weekly support right here at 168.70. Now that we've had a bearish weekly candle close below that weekly support level, then basically this is nothing stopping it from becoming a downtrend, or it is already in fact. So we can see some continuation, and my idea is to target the 382 or otherwise the weekly support between 163 and 161.28. 163 would be the conservative target. And what I'm looking for is basically a retracement of last week's bearish candle to the broken support level, which now might become resistance at 168.70 for a short, maybe with a stop loss. For example, what I could do is below the last week's high for a down move all the way to the 382 fib, and you can see that that is a great reward to risk potential. So on a day chart, that would look something like this. Around here, a stop loss, looking for a bit of an up move here first, up to that broken bottom for a downside to 382 fib. Well, that wraps it up. Don't forget, we have great webinars this week, and if you register for any Wednesday or Thursday, you'll get a bonus indicator for our live trading sessions. So make sure to join then. Otherwise, I'm looking forward to seeing you very soon in one of these webinars. Cheers, everyone.